Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Kunal Shah, Head of Commodities Research, joining in. Kunal, welcome to the show. Kunal, the dollar continues to decline in terms of yesterday's session as well as today. How do you see it moving and the impact that we could see, especially in terms of gold and silver? Because it's a fourth consecutive session of drop and it's down a little over 2% during the week.
Okay, so one must understand what happened yesterday. There were a lot of people who were asking yesterday what happened to gold, silver, in spite of the fact that gold and the dollar index weakened. Gold and silver initially went down. So what is happening is basically Europe and Britain. These two economies are basically Eurozone and Britain. They both are on the verge of aggressive tightening. So they are likely to tighten their monetary policy aggressively. So that is generally bearish for gold. But the fact is, everything is versus the dollar. So when they start to tighten, then dollar starts to weaken, and that's what happened yesterday. Across the world, there is a major concern of the geopolitical tension between Russia and Ukraine. It seems far bigger problem right now because from last 1 month, the negotiations are going on and nothing constructive has happened. And that brings interesting junction in the market. What if US imposes sanction on Russia? So remember, there is a sanction on Iran right now by US, and because of which Iran is not able to produce 2.5 million barrels of crude oil. So just imagine if Iran was having no sanction, and they were producing 2.5 million barrels of exporting that 2.5 million barrels of oil to the global market, then what would be the price of oil? Oil wouldn't have been trading at $90. So similarly, if US imposes sanction on Russia, so this entire geopolitical premium is basically getting built up in the price right now. And hence the prices of oil are moving up. So it's no longer demand and supply right now, which is dominating the complex. But it is, the overall scenario is the overall scenario is that because of the ongoing problem between Russia and US is sending 3,000 troops, the NATO, to their NATO allies. So entire geopolitical build-up is such that it seems that there is no reason why oil should go down until this entire crisis is de-escalated. So if that is taking place, then yes, I would say that oil would go down, but that is not taking place. And hence, I'm of the view that in near term, two commodities which are going to remain in focus, one is oil and another is gold. So buy at dips at any levels. These two commodities are going to do wonderful till the time we get any confirmation that this entire crisis is de-escalated. I think the premium, already $5 premium of geopolitical crisis is built in crude oil. Another $5 of premium still can take place. So WTI can test $95 and Brent can test $98. So I think for the time being, it looks that we are amidst the energy crisis in the world, and we require more triggers for this crisis to de-escalate, which we are not getting right now.
Right. And simultaneously, then how do you see natural gas as well? Because there is a fundamentally positive impact on the back of the weather conditions in the US, which are supporting prices. How will this entire geopolitical crisis also impact natural gas then?
It's the energy crisis in the world. So when you look at what has happened yesterday, if you have heard the speech of European Central Bank chairman, or if you heard, or if you see, so I would just try to give a breakup of US and Europe inflation. So 50% rise in inflation is because of the gasoline, that is petrol prices. In Europe, more than 55% of the inflation is because of the crude and gas prices. So we require more evidence and more efforts by the oil producers and gas producers to hike the production and the demand to moderate. So till the time we have this harsh winter conditions, at that time demand is not going to moderate. And the supply side, OPEC is reluctantly just increasing 4 lakh barrels per month. It actually market now with the Omicron subsiding across the globe. Market wants, OPEC to increase the production by 1.5 million barrels, 2 million barrels in one single month. But unfortunately, that is not taking place. So right now, it is the energy crisis in the world. We require triggers. The triggers are not coming. Till then, we should not fight. Everyone wants to short oil. It's a fundamental call, oil sometime is going to go down. We don't know the timing right now, but it seems that it can still go up a bit before it comes down. So don't short 6900, 6920. You can go long for the target. Gold looks very promising to me. Please, everyone who's listening to my webinar, with whatever geopolitical concerns going on across the world and the dollar index where it is right now, gold is about to take off to 49,000 rupees by the end of next week. So go long in gold. Everyone listening to this webinar, and I think with whatever is going on across the world, gold is just going to go up. Natural gas is also going to go up for the day. Silver is also going to go up for the day. And Mr. Girish is asking me, what is the view on zinc, lead? Okay, so zinc and lead, Mr. Girish, it's again, this geopolitical crisis, whenever there is this kind of built up and dollar is weakening, they will not go down. So from trading perspective, go long in even metals. So Russia produces a lot of nickel and a lot of aluminum. So if Russia is getting sanctioned from Europe, you see that news, just buy aluminum and nickel at market. It's immediately. So if that kind of news comes, so don't short, right now metals. In fact, it can surprise everyone and move up. So I'm of the view that if you want to go long, nickel and aluminum are better commodities to go long.
Right. And Kunal, overall, another question that's coming up is in terms of where the non-farm payrolls data is concerned, what's the expectation and impact that we could see?
Yeah, so I think the data is going to be bad today, and it's going to be supportive for gold. The reason for that is last month we had a resurgence of Omicron cases in United States. And because of that, I'm expecting, the payrolls data to be positive for gold and bearish for the US economy. Prior payrolls was 199K, expectation is 125K. And unemployment is expected to move up from 4.7 to 5.2. So these two numbers are very important. So if this non-farm payroll is, say, for example, 50 rupees, 50K. So if it is just 50K, gold will move up by 500 rupees after the data. That's my guess. And if the data comes at 100, 110, you will see 300 to 350 rupees spike. And if you see unemployment more than 5.4, 5.5, you will again see gold shooting up. It's going to be very interesting evening today at 7 p.m. And I am expecting gold to shoot up and fire at all cylinders.
Right. And Kunal, anything with regards to the agri-commodity front?
Agri-commodity, Jeera looks good. All soft commodity looks positive. Cotton looks positive. Jeera looks positive. Turmeric looks positive. And that is what. So Nitin Agarwal is asking me, can we buy gold and silver at present level? Yes, you can buy at current market price and expect stop loss. See, I'm not a technical analyst, but I can give you a rough idea about the stop loss, So my levels are not, the technical level. I asked my technical team to give me levels. And as per my understanding, I give my levels. I think gold stop loss should be 47,850. And for silver, stop loss should be somewhere at 61,790 to 800. That should be your stop loss. So these are not technical levels. Okay, it's just my mathematics which works here. So this two you can go long. Crude, what to do, sir? Crude looks positive for the day. Silver looks positive for the day. Please don't ask same question again and again. I think a lot of people are asking same question again and again, but it looks positive, sir. Everyone go just long in gold and silver today. And my pick for the evening is gold. Just go for it.
All right. Thank you, Kunal. Thank you, participants, for joining in as well, and have a great weekend.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.